Based on the historical data and forecast, Bitcoin shows a downtrend, particularly evident in the recent forecast prices decreasing from 89,800 to 87,000. The RSI has dipped below 40, indicating an oversold condition on January 22, 2026, at 39.7. Considering the forecast, I recommend a short position. The entry price should be $89,100. To manage risk, set a stop loss at $87,200, which is the support level. The target price should be $87,000, aligning with the forecast low. To refine the strategy, we can incorporate the Bollinger Bands. If the price breaks below the lower band, it confirms the downtrend. The lower Bollinger Band on January 22, 2026, is $87,500. Therefore, if the price falls below $87,500, the short position should be maintained. If the price reaches the target of $87,000, consider taking profits. This combined strategy, leveraging RSI and Bollinger Bands, aims to capitalize on the predicted downtrend while mitigating potential losses. Based on the historical data and forecast, Ethereum has shown significant volatility. The RSI indicates periods of both oversold and overbought conditions, while the Bollinger Bands suggest potential price fluctuations. The recent downtrend in the forecast data, coupled with the proximity of the support price at $2,830, suggests a potential short-term decline. Therefore, I recommend a combined strategy incorporating RSI and Bollinger Band signals. We will initiate a short position at $2,920, placing a stop-loss order at $2,950 to mitigate potential losses if the price reverses. The target price for this short position will be $2,810, aiming to capitalize on the anticipated downward trend. To refine this strategy, we will implement a dynamic adjustment based on the Bollinger Bands. If the price touches the lower band of $2,810, we will exit the short position, securing profits. Conversely, if the RSI reaches an oversold level below 20, we will consider covering the short position and potentially initiating a long position. This adaptive approach allows us to respond to changing market conditions and optimize returns. The combined strategy provides a balanced approach, combining technical indicators and price action to maximize potential gains while managing risk effectively. Based on the historical data and forecast, BNB demonstrates a declining trend. The recent price action shows a struggle to maintain above $880, and the forecast indicates further downward pressure, potentially reaching $849. Considering the RSI values, the asset has been fluctuating between oversold and overbought levels, suggesting periods of volatility. The Bollinger Bands indicate that the price is approaching the lower band, reinforcing the bearish sentiment. Therefore, a short selling strategy is recommended. Enter a short position at $887, placing a stop-loss order at $895 to protect against a potential reversal. The initial target price should be $858, aiming to capitalize on the anticipated decline. To refine the strategy, we'll incorporate a layered approach. If the price reaches the first target of $858, consider moving the stop-loss to the entry price of $887 to secure profits and reduce risk. A second target price can be set at $849, aligning with the forecast low. The RSI readings, particularly the recent dip below 45, further support the short position. This layered strategy aims to maximize potential returns while mitigating downside risk by dynamically adjusting the stop-loss based on price movements and the overall bearish trend. Based on the historical data and forecast, XRP shows a slightly downward trend, with recent price fluctuations. The RSI values have been oscillating between 40 and 60, indicating neither strong overbought nor oversold conditions recently. The Bollinger Bands have been widening, suggesting increasing volatility. Considering the forecast for the next week, the price is expected to hover around $1.91 to $1.96. Given these factors, I recommend a cautious strategy focusing on short-term opportunities. My proposed strategy is to implement a combined RSI and Bollinger Bands approach. I suggest entering a long position at $1.93 when the price touches the lower Bollinger Band. Set a stop-loss at $1.86, just below the recent support level and the bottom of the Bollinger Band. The initial target price would be $2.01, aligning with the upper Bollinger Band and a reasonable profit target. If the price reaches $2.01, consider moving the stop loss to break even to protect profits. If the RSI falls below 30, indicating an oversold condition, consider a second entry at $1.91 with a stop loss at $1.88 and a target price of $2.03. This combined strategy aims to capitalize on short-term volatility while managing risk effectively. Based on the historical data and forecast, Solana shows a downtrend, with the forecast price declining from $129 to $121 over the next week. The RSI indicates that the asset is currently in an oversold territory, fluctuating around 42 to 46, suggesting a potential for a bounce. The Bollinger Bands show that the price is approaching the lower band, further supporting a potential rebound. Considering these factors, I recommend a contrarian strategy, anticipating a short-term price recovery. My proposed strategy is to enter a long position at $121, coinciding with the forecast price and the lower Bollinger Band. Set a stop loss at $120, just below the lower band, to limit potential losses if the downtrend continues. Aim for a target price of $126, aligning with the support level and providing a reasonable profit margin. This strategy combines the oversold RSI signal, the lower Bollinger Band proximity, and the support level to maximize potential gains while minimizing risk. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, TRON shows a mixed trend with periods of consolidation and slight upward movement. The RSI fluctuates between 48.1 and 72.3, indicating both oversold and overbought conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility. Considering the recent price action and the forecast for the next week, I propose a moderately bullish strategy. We will initiate a long position when the RSI falls below 50 and the price touches the support level of $0.302. The entry price will be $0.302. To manage risk, we will set a stop-loss order at $0.297, just below the recent low. The initial target price will be $0.312, aligning with the recent resistance level. To enhance returns, we will implement a trailing stop-loss strategy. Once the price reaches $0.312, we will adjust the stop-loss to $0.302, securing a portion of the profit. If the price continues to rise, we will further increase the stop-loss, ensuring that we capture maximum gains while protecting against potential reversals. The final target price will be $0.319, based on the highest resistance price observed in the historical data. This strategy combines RSI signals, support and resistance levels, and Bollinger Bands analysis to maximize potential returns while minimizing risk. Based on the historical data and forecast, Dogecoin shows a fluctuating trend with a recent downward pressure. The support price has remained consistent at $0.123, while the resistance has varied. The RSI indicates periods of oversold conditions, particularly around January 19, 2026, with a reading of 39.6, and January 22, 2026, with a reading of 39.4. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering these factors, I propose a contrarian strategy focusing on potential rebounds from the support level. My recommended strategy is to initiate a long position when the price touches or slightly breaks below the support level of $0.123. The entry price would be $0.122. A stop-loss order should be placed just below the support at $0.121 to limit potential losses. The target price would be set at the nearest resistance level of $0.149, aiming for a substantial gain. Furthermore, we can utilize the RSI to fine-tune the strategy. If the RSI falls below 20, it signals a strong oversold condition, strengthening the case for a long position. Conversely, if the price approaches the upper Bollinger Band while the RSI is above 80, it suggests a potential short-term reversal, prompting a cautious approach. This combination of support/resistance and RSI/Bollinger Bands analysis should yield a high-return investment strategy. Based on the historical data and forecast, Cardano has shown considerable volatility, fluctuating between a support price of $0.351 and a resistance of $0.423. The RSI has been oscillating around 50, indicating neither strong overbought nor oversold conditions recently. However, the forecast for the next week predicts a slight downward trend, with prices ranging from $0.366 to $0.353. Considering the Bollinger Bands, the price has been consistently near the upper band, suggesting potential for a pullback. Therefore, I propose a strategy that combines RSI and Bollinger Bands to capitalize on potential short-term movements. My strategy involves a short position entry at $0.366. Given the downward forecast and the price nearing the upper Bollinger Band, a stop loss should be placed slightly above the upper band at $0.368. The target price for this short position will be the support price of $0.351, aiming to capture a potential decline. If the price breaks through the resistance of $0.423, the position should be closed immediately to minimize losses. This strategy aims to leverage the predicted downward trend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Bitcoin Cash shows a downtrend with significant volatility. The RSI indicates that the asset is currently in an oversold condition, hovering around 40, suggesting a potential bounce. The Bollinger Bands are widening, indicating increased volatility and potential for price swings. The forecast suggests a relatively stable price around $600 to $614 over the next week, but the overall trend remains uncertain. Therefore, I propose a moderately bullish strategy with a focus on capitalizing on potential short-term rebounds. My recommended strategy is to enter a long position at $597. Given the oversold RSI and the support level at $573, a stop loss should be placed at $573 to mitigate potential losses. The initial target price will be $606, aligning with the upper end of the forecast range and a conservative profit target. If the price breaks through $606 and shows further bullish momentum, the target price can be adjusted to $614. This strategy combines RSI signals, Bollinger Bands volatility, and the forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH has shown considerable volatility. The price initially rose from $33.60 to $36.50, then experienced a significant correction, falling to $3,200. The RSI indicates that the asset was oversold on January 22, 2026, with a reading of 39.4, suggesting a potential bounce. The forecast for the next week predicts a continued downward trend, with prices ranging from $32.90 to $31.10. Considering these factors, I recommend a contrarian strategy, aiming to capitalize on potential rebounds while mitigating downside risk. My strategy involves a long position entry at $3,110, coinciding with the lowest forecast price and a potential oversold condition. A stop-loss order will be placed at $3,070, just below the established support level, to limit potential losses. The initial target price is set at $3,260, aligning with the recent resistance level and a potential recovery point. If the price reaches $3,260, we will reevaluate the situation. If the upward momentum continues, we can raise the target to $3,350. This strategy combines RSI signals, Bollinger Bands analysis, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, TRON shows a mixed trend with periods of consolidation and slight upward movement. The RSI fluctuates between 48.1 and 72.3, indicating both oversold and overbought conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility. Considering the recent price action and the forecast for the next week, I propose a moderately bullish strategy. We will initiate a long position when the RSI falls below 50 and the price touches the support level of $0.302. The entry price will be $0.302. To manage risk, we will set a stop-loss order at $0.297, just below the recent low. The initial target price will be $0.312, aligning with the recent resistance level. To enhance returns, we will implement a trailing stop-loss strategy. Once the price reaches $0.312, we will adjust the stop-loss to $0.302, securing a portion of the profit. If the price continues to rise, we will further increase the stop-loss, ensuring that we capture maximum gains while protecting against potential reversals. The final target price will be $0.319, based on the highest resistance price observed in the historical data. This strategy combines RSI signals, support and resistance levels, and Bollinger Bands analysis to maximize potential returns while minimizing risk. Based on the historical data and forecast, Bitcoin Cash shows a downtrend with significant volatility. The RSI indicates that the asset is currently in an oversold condition, hovering around 40, suggesting a potential bounce. The Bollinger Bands are widening, indicating increased volatility and potential for price swings. The forecast suggests a relatively stable price around $600 to $614 over the next week, but the overall trend remains uncertain. Therefore, I propose a moderately bullish strategy with a focus on capitalizing on potential short-term rebounds. My recommended strategy is to enter a long position at $597. Given the oversold RSI and the support level at $573, a stop-loss should be placed at $573 to mitigate potential losses. The initial target price will be $606, aligning with the upper end of the forecast range and a conservative profit target. If the price breaks through $606 and shows further bullish momentum, the target price can be adjusted to $614. This strategy combines RSI signals, Bollinger Bands volatility, and the forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Render has shown considerable volatility with a recent downtrend. The RSI consistently dipped below 60, indicating oversold conditions, especially around January 22, 2026, with a reading of 59.0. Considering the forecast for the next week, the price is expected to hover around $2.1, and the Bollinger Bands suggest a potential for a slight upward movement. Therefore, I recommend a strategic long position entry at $2.12. A stop-loss should be placed at $1.95, just below the recent low, to protect against further downside risk. The initial target price is set at $2.3, aligning with the recent resistance level. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI falls below 30, indicating a strong oversold condition, we'll enter a long position. The stop-loss will be set 5% below the entry price, and the target price will be 10% above the entry price. When the price touches the lower band of the Bollinger Bands, it signals a potential buying opportunity. The stop-loss will be set at the middle band of the Bollinger Bands, and the target price will be the upper band. Combining these signals, the most efficient portfolio would be to enter a long position at $2.13, with a stop-loss at $2.05 and a target price of $2.35. This approach balances risk and reward, capitalizing on potential upward movements while mitigating potential losses. Based on the historical data and forecast, Zcash shows a downtrend with consistent lower highs and lower lows. The support price of $349 is consistently tested, and the forecast indicates further decline. The RSI consistently remains below 50, indicating a bearish momentum, with several days trading below 40, suggesting oversold conditions. The Bollinger Bands are contracting, which often precedes a significant price movement. Considering these factors, I recommend a short selling strategy. Entry price should be $360, with a stop-loss placed above the upper Bollinger Band at $524. The initial target price is set at $346, near the support level, aiming for a quick profit. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI dips below 35, it indicates an oversold condition, providing a potential entry point. If the price touches the lower Bollinger Band, it further confirms the downward trend. Therefore, I suggest entering a short position at $354, with a stop-loss at $524, and a target price of $346. If the price reaches the target, consider moving the stop loss to break even to protect profits and potentially ride the trend further. A second entry can be considered at $344 with a stop loss at $524 and a target price of $331. This layered approach maximizes potential gains while minimizing risk. Based on the historical data and forecast, PAX Gold exhibits a clear upward trend. The RSI consistently remained above 60, indicating bullish momentum, and peaked at 85.1, suggesting overbought conditions towards the end of the observed period. The forecast prices predict a continued ascent, reaching 54.20. Combining these observations, I recommend a bullish strategy focusing on capitalizing on the upward trend. We will initiate a long position at $4,930, placing a stop-loss order at $4,880 to mitigate potential losses. The initial target price will be $5,330, aligning with the forecast price and allowing for a significant profit. To refine the strategy and maximize returns, we will incorporate the Bollinger Bands. When the price approaches the upper band, we will consider taking partial profits. Specifically, if the price reaches $5,270, we will sell a portion of our holdings to secure gains. Subsequently, we will adjust the stop-loss order to the center of the Bollinger Bands, which is around $5,170, to protect the remaining position. If the price continues to rise, we will maintain the upward trajectory with the final target price set at $5,420. This dynamic approach allows us to adapt to changing market conditions and optimize our investment outcomes. Based on the historical data and forecast, SKY shows a generally upward trend. The price has been fluctuating within a range between 0.0551 and 0.0692, with support around 0.0633 and resistance around 0.0672. The RSI indicates that the asset is currently not oversold, but approaching the overbought territory. The Bollinger Bands suggest that the price is trending towards the upper band, indicating potential upward momentum. Considering these factors, I recommend a long position strategy. Specifically, I suggest entering a long position at $0.0651. Set a stop-loss order at $0.0633, just below the support level, to limit potential losses. Aim for a target price of $0.0697, aligning with the forecast price and the upper Bollinger Band. This strategy combines the upward trend, RSI readings, and Bollinger Band signals to maximize potential returns while managing risk effectively. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, Pendle shows a mixed trend with periods of consolidation and minor upward movement. The price has been fluctuating within the support of $1.91 and resistance of $2.25. Considering the RSI readings, the asset has been mostly neutral, with occasional dips into oversold territory, below 40, and approaching overbought levels, above 60. The Bollinger Bands indicate periods of volatility, with prices occasionally touching the upper and lower bands. Given the forecast for the next week, the price is expected to gradually increase, starting from $2.08 and reaching $2.21. Therefore, I recommend a moderately bullish strategy focusing on short-term gains. My strategy involves a series of calculated entries and exits based on RSI and Bollinger Bands. First, enter a long position at $2.08, placing a stop-loss order at $1.91 to protect against potential downside risks. The initial target price will be $2.17, aligning with the forecast price and a reasonable profit margin. If the price reaches $2.17, reevaluate the situation. If the RSI is below 80 and the price is near the lower Bollinger Band, consider entering another long position at $2.11, with a stop loss at $2.07 and a target price of $2.21. This layered approach allows for capitalizing on potential upward momentum while mitigating risk through strategic stop-loss placements. Based on the historical data and forecast, LayerZero demonstrates a clear upward trend, consistently breaking through resistance levels and showing positive momentum. The RSI consistently remains above 60, with several days exceeding 80, indicating strong buying pressure and potentially overbought conditions. The forecast for the next week projects continued price increases, further reinforcing the bullish outlook. Considering the support price of $2.04 and the forecast, I recommend a long position strategy. We will enter a long position when the RSI falls below 60, targeting a price of $1.98. To mitigate risk, set a stop-loss order at $1.94, just below the recent support level. The initial target price is $2.38, aligning with the upper end of the forecast range. To refine the strategy and maximize returns, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition, and we can enter a long position. If the price is at $1.98 and the RSI is below 60, we will enter the market. Place a stop-loss order at $1.94 and a target price of $2.38. This combined approach leverages both momentum indicators and volatility bands to identify optimal entry and exit points, aiming for high returns while managing risk effectively. This portfolio will be the most efficient strategy. Based on the historical data and forecast, Axie Infinity shows a strong upward trend. The price has consistently broken through resistance levels, and the forecast indicates continued growth. The RSI has been fluctuating between 50 and 80, suggesting periods of both buying and selling pressure, but overall leaning towards overbought conditions. The Bollinger Bands have widened, indicating increased volatility and potential for significant price movements. Considering these factors, I recommend a long position strategy. We will enter a long position at $2.2. The stop-loss will be set at $2.1, just below the forecast price to mitigate potential downside risk. The initial target price will be $2.78, aligning with the forecast for January 26, 2026, and the upper Bollinger Band. To optimize the portfolio, we'll employ a tiered target strategy. If the price reaches $2.78, we will move the stop-loss to $2.5 to secure profits and protect against a potential reversal. If the price continues to climb, the next target will be $2.93, followed by $3.05, aligning with the forecast for January 29, 2026. This approach allows us to capitalize on the upward momentum while managing risk effectively. This strategy combines technical indicators, forecast data, and support/resistance levels to maximize potential returns and minimize losses. Based on the historical data and forecast, the Sandbox shows a clear upward trend. The price has been consistently bouncing off the support level of $0.136 and approaching the resistance level of $0.172. The RSI values have been fluctuating, but recently showing an upward trend, indicating increasing buying pressure. The Bollinger Bands have also been widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. Specifically, I suggest entering a long position at $0.144. The RSI is currently below 80, indicating there is room for further upside. Place a stop-loss order at $0.136, right at the support level, to protect against a potential downside reversal. For the target price, I propose $0.163, aligning with the forecast price for the end of the week and allowing for a reasonable profit margin. This strategy combines technical indicators and price action analysis to maximize potential returns while managing risk effectively.